Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open on a day which promises a little bit of green, at least at the start. Let's get started with the headlines. Donald Trump extends the deadline to impose additional tariffs of Chinese imports, says final decision will be taken after he meets the Chinese Premier Xi Jinping. The GST Council approves lower tariffs for under-construction projects, also cuts rates on affordable housing. The Prime Minister rolls out the minimum farm income scheme from Uttar Pradesh as the government tries to woo farmers ahead of the assembly elections. And Uber is in talks to sell its food delivery app Uber Eats to rival Swiggy. Sources tell Bloomberg that a deal could be sealed within the coming weeks. That's the big news on the private side, but what about the public side and how will they be impacted? Well, it's a very interesting week that we have lined up ahead of us. Now, firstly, what's to watch out for the whole of this week and what's already happened. So a synopsis of all the activity that should be center stage of the global market's mind. The trade talks between US and China going right down to the wire, with Donald Trump also saying, and we'll get to that as well, about that he's extending the March 1st deadline. But beyond that, there's Theresa May delaying the Brexit vote to buy more time, and therefore that is something that you got to keep at the back of the mind. Donald Trump and Kim Jong-un would meet in Vietnam later this week, so that is very important too. Robert Lighthizer will give updates on the trade talks on Wednesday, so that's the other thing you need to watch out for. And India would be releasing its GDP data on Thursday, and that is something that you got to keep in mind as well. Add to that this constant issue that between India and Pakistan that will also dominate politics as well as Indian trade. So lots to watch out for this week. Amidst all of this, what did the US markets do last week, and particularly in Friday's session? The Dow notched the 9th week winning streak. It was a pretty decent day in Friday's session, up about 181 odd points. More importantly, quite unlike what's happening in India, in the US, the small caps too are doing well. The Russell 2000 recorded the longest weekly winning streak since 1996, and that shows the kind of breadth that the US markets have. And those markets and that there, the small caps too seem to be doing okay. So the market mood out there in the US a lot more sanguine than what is back home. Though I must say 10-8-2-2, I don't think we should be complaining too much. But this trade war uncertainty, let's see if it continues to weigh in on our markets in the session today. The Asian screen, of course, showing a bit of a green start. It's an expiry week, therefore promises higher volumes as well as higher volatility. And what could act as a bit of a hurdle to India is that oil continues to move up. Now, the US oil is trading at the highest levels this year. And that is something that should worry bulls, if at all. Volatility is high, yes, but the oil price uptick should essentially act as a ceiling for some bit of optimism. What is just a bit heartening from an emerging market perspective is that because of this consistent trade talks between US and China and the optimism building around it, the Chinese currency, or the yuan, is stable. China, the fear amongst a lot of emerging market investors was that what if China were to go out and devalue the yuan? That is not happening. It's not a very widely followed metric, but an important one currently, and that is doing okay. This morning as well, yuan is building on the gains, so that is something that should be soothing to the investors' minds. As we speak though, look at what the Asian screen is doing. Nikkei is 0.5%, yes, but Shanghai is up and about, doing extremely well for itself. Hang Seng about 0.33% too, and the SGX Nifty indicating a start which is mildly in the green. Not saying it's a big rub of green, but at least it's some bit of green. So let's wait and watch if there is some more upside to the Indian markets in the session today. I think Donald Trump's tweet should lead to that. The fact that he's saying that the March 1st deadline has been delayed for the time being and the talks are looking a lot more optimistic should only augur well for the sentiment. However, amidst all of this, what are the stocks that one should watch out for? Firstly, Adani Ports. They're going to buy out an agri-logistics business from Adani Enterprises at an EV of 1,660 crores. Now, optically, it's a good business, but the point is because it's a related party transaction, brokerages are saying, and because the benefits come in only from FY21, brokerages are saying that this is not something that has pleased them. So most brokerages have come and said, pointed out a concern or two for this deal. So Goldman Sachs, for example, says that the acquisition would further defer the free cash flow plan for Adani Enterprises. Citi has downgraded the stock to a neutral from buy. They've cut the target prices to 385 from 509. So that's the other interesting one. And keep in mind, one more brokerage mentioned that this puts into question mark the kind of use of money. Citi, I think they mentioned that acquisition appears expensive and raises questions on capital allocation. So this is one stock to monitor. NMDC is the other one to monitor. They've announced a mid-month price hike of 15 to 17%. This is again as per a Bank of America Merrill Lynch report, by the way. We don't have official confirmation, but this follows the surprise cut of 7 to 10% announced in early Feb. The price hike is supported, of course, by the global iron ore prices rising. So all of this, let's see if augurs well for NMDC. And speaking of NMDC and metal names, Morgan Stanley has come out with a note on the metal stocks. They believe the favorable risk reward prompts an upgrade of steel stocks. So therefore, they have upgraded JSPL to an overweight and JSW Steel and SAIL to an equal weight. They've downgraded Hindalco to equal weight and Vedanta remains at equal weight. But essentially, the catch out here is the steel stock. So JSPL, JSW Steel, SAIL. Let's see what happens to these today. And let's see, of course, what happens to NMDC. Metals might well be center stage in trade today. However, let's tell you what's lined up on First Word today. It's the collection of the top editorial stories that we believe we should bring to you. Trump postpones hiking tariffs on Chinese imports. The effort now is to crack a comprehensive deal. Bloomberg's Tom McKenzie will tell us what lies next, and then speak with Peter Cardillo and Geoffrey to understand how the markets are viewing this extended trade truce. Back in India, the GST Council has cut tax rates on under construction residential properties. Nikunj Ori will detail the new tax slabs. UPL seems to have gotten over the Arista acquisition worries. Darshan Mehta will tell us what's changed the sentiment for the better. And Warren Buffett is ready to make a giant acquisition if only the valuations weren't sky high. We bring you the highlights of his annual letter to shareholders. US President Donald Trump will hold off raising tariffs on Chinese imports after what he called quote-unquote very productive trade talks. Tariffs were supposed to be hiked from 10 to 25% next Saturday, but both sides have decided to work on a more comprehensive agreement. Let's first hear from Bloomberg's Tom McKenzie.
This isn't, of course, a major surprise, given what we heard from President Trump just in the last week or so in terms of the optimism from him in terms of these negotiations. But, of course, it is a major step potentially towards a deal now. You've had this tariff deadline on March the 1st lifted or extended by the US. That would have increased, by the way, those tariffs from 10 to 25% on $200 billion worth of Chinese goods. And as you say, President Trump suggesting that now we're looking at a meeting between the two leaders at some point. We've heard from others in the administration at some point, potentially by the middle or end of March at Mar-a-Lago. So certainly more optimism. It's interesting that contrast with some of the more nuanced comments that we got out of USTR Lighthizer over the weekend, who said that there were still major hurdles between the two sides. And of course, our reporting suggesting that one of those hurdles was a disagreement around the enforcement of any deal on the yuan. Of course, the US have been pushing the Chinese to say that they will keep the yuan stable because the US are concerned that should they devalue it, it would mitigate the impact of tariffs. And apparently the enforcement mechanism, there are still details that need to be ironed out from that, and that has remained an area that the two sides need to close the gap on. But in other fronts, Trump saying that they've made progress on things like intellectual property, enforced tech transfer, services, agriculture as well. So clearly the president sees that there has been enough progress to extend this deadline.
Joining us on the show now is Peter Cardillo, Chief Market Economist at Spartan Capital, and independent market emerging market commentator Geoffrey who joins us from California. Gentlemen, both of you, good morning and good evening respectively. Thank you so much for joining in. Jeff, let me start off with you. What did you make of the tweet? I think it was going right down to the wire. This maybe gives some breathing space, and should the markets take this positively?
Oh, yes, I think the market should take this positively. I think, as your reporter said, it wasn't particularly a gigantic surprise that we have seen this deadline pushed out before the tariff increase comes in. But still, there's always a degree of uncertainty, and of course there's many issues still to be resolved. But I think this is uniformly good news for the markets at the moment, and you're seeing that reflected in a big jump in Chinese shares, of course, this morning, and also a nice move higher in the futures in the US. So I think you view this as reducing the risk at the margin of an escalation of the trade war, which would be damaging for the global economy. I think it's good for risk assets. And so although the issues have not all been resolved, this should be viewed as extremely good news, I think, for risk assets.
I must say it is playing as per script on the basis of what Geoffrey Dennis has been telling us in the past. He kind of half anticipated this were to happen. Peter, how would you view this? It is still subject to some meetings between Trump and Xi Jinping, but after 2 weeks of extended conversations, which got extended to the weekend, by the way, this should be taken positively. The equity screen this morning, for example, is showing that the markets like what's just come out.
Yes, I think there's no question about it that the fact that, President Trump extended the deadline obviously means that we're very close to a deal. And of course, I think that's what's creating a lot of enthusiasm in the market. And I think that, the fact that the market continues to rally is a good sign that not all of it is actually already placed in the market. By that, I mean that when and if we get a deal, and I believe we will get a deal, the market is probably not going to pull back. So I don't think investors are going to sell on the news. Now, that doesn't mean that you can't have a small pullback before a deal is announced, but I do believe that a deal is in the makings, and that deal is going to avoid a very chaotic global economy. And so the market, I think, will look forward and say, well, now a deal is reached, so we can see perhaps stabilization in the global economy and perhaps even a rebound.
Interesting. Peter, a lot of commentators in the run-up to this decision, it's not a decision as yet, but whatever decision has come out, were saying that what a truce would do essentially is let the markets continue the way they normally would have. A breakdown in the deal would have brought a pullback. This is now returned to normalcy. My question to you is, what is normalcy for the US markets? S&P is trading at levels from where it's retreated each of the 4 instances since October that it has managed to reach there. Do you expect normalcy to be a higher S&P 500 and higher Dow, or could there be a bit of a pause here?
No, I think, as I said, I think the market is going to continue to rally. However, there is one major problem that lies ahead, and that is first quarter earnings. It does appear that we're probably headed for a real slowdown in earnings. And I would probably think we could be headed for a recession, an earnings recession. So that means that valuations would probably be pressured. But again, we're over 7 or 8 weeks before we begin to see those earnings. So I think from now to earnings season, the market probably will continue to rally, and it will rally, as I said, because of a trade deal.
Okay. Jeff, how important is this for the emerging market pack as well? China notwithstanding, and the fact that the yuan is a lot more stable in the run-up to the deal and post this tweet by Donald Trump as well. How important it is for an emerging market watcher and from an India perspective too?
Oh, I think it's very important indeed for emerging markets. I mean, clearly you haven't seen much in the way of additional generalized dollar weakness, at least in the first few hours after these tweets came out from the president. But the strength in the CNY is very helpful. But in general, I think, whereas, as Peter says, the U.S. market will have to deal with pressure on earnings and potentially, clearly, high valuations. EM is much cheaper. It's not super cheap, but it's much cheaper than the U.S. We typically do well when the global economy is doing well. At the margin, as I think we all agree, this is helpful for the global economy, assuming eventually we do get a full-fledged deal. And if that coincides also, which is my view, with further dollar weakness, you take, even more than's been the case recently, you take worries about the Chinese currency off the table, which obviously in the last 3 or 4 years periodically has been a concern. So I think, as I said in my initial comment, this is very good for risk assets. And I think this sort of news, if it ultimately translates into a trade deal, a full-fledged trade deal between China and the U.S., does put a floor into the global economy, and I think will allow emerging markets to outperform in 2019.
Well, let's see. And let's see if India participates in that also or no. But gentlemen, both of you, thank you so much for staying up this late this Sunday evening and giving us your thoughts. Really appreciate your time.
Thank you.
That's Jeff Dennis and Peter Cardillo, both talking on the trade deal. The Shanghai markets, the Chinese markets are really doing well, 2.8% as we speak, so gaining ground. SGX Nifty hasn't budged as much from the levels that it was at. Okay, back home to local news. The Goods and Services Tax Council has decided to provide some relief to home buyers. The council has slashed the tax rate on under construction residential properties to 5% and on affordable housing projects to 1%. Nikunjori has this report.
GST Council has approved lowering of GST rate for the real estate sector, a move which is intended to give boost for the real estate sector by increasing sales. The GST Council has lowered GST on under construction properties to 5% from 12%, and for affordable housing projects, GST has been reduced from 8% to 1%. The benefit of input tax credit that could be availed by developers earlier will no longer be available to developers. The GST Council has also widened the definition of affordable housing projects. A flat or a house with 60 square meter of carpet area in a metro city and 90 square meter carpet area in a non-metro city with a price cap of 45 lakh rupees will come under an affordable housing project. Both these conditions of carpet area and the price will have to be met for a project to be classified as an affordable housing project. The rate changes will be effective from April 1, 2019, and the rate changes are revenue neutral, implying that the government will not incur any revenue loss due to these tax changes.
Okay, we'll ask experts about what would this do to real estate stocks, but remember a special conversation coming in a bit later on the show as well. So I think you got to just wait for figuring out what happens to some of the real estate stocks. Let's also listen in to what some of the state finance ministers had to say after that meeting.
For affordable housing, 1% for non-affordable housing, 5% both without ITC,
also lottery
and a capping of 45 lakh.
So lottery
and for the metro, 60 square meter, and for non-metro, 90 square meter, and a capping of 45 lakhs. That is the main decision of the GST Council. And the lottery discussion is going on. 1 April.
We must understand that why I said 1%. Because Government of India's own research shows that the tax incidence across states averages to 0.76%. So my justification was very solid, and I'm happy that the Honorable Union Finance Minister and the GST Council have accepted my submission. For the sake of affordable housing, it's very important that our fight was on affordable housing should not be discriminated. Group of ministers had proposed 3%. I felt that would punish affordable housing. And I'm very glad that today GST Council, chaired by Union Finance Minister, has agreed with my proposal, officially written to the Union Finance Minister on the 21st of this month.
Now, affordable housing, we also adopted certain definition. So it would mean, say, houses with less than 60 square meters in the metros and 90 square meters in the non-metro area, subject to a cost limit of 40 lakh rupees.
45 lakhs or 40?
40. So that is the answer.
Other ministers are saying 45. Other ministers are saying 45 lakhs.
Maybe that. I mean, yes. Lots of numbers will be handed out. I think the Union Finance Minister, what he announced, will be the one.
So what about lottery? Your state had a...
Well, lottery, it was not discussed in the GO thoroughly. because Kerala, Punjab and Bengal were absent. And therefore it has been decided after long discussion to refer it back to GOL.
Thank you. Thank you so much.
We will have, because regarding the realty sector, there are many procedural issues involved, very complicated. And therefore it was decided the officials will continue to work on it. But things are procedural only, therefore they would be determined by a video conference.
When will this be?
April 1st will come into effect.
Okay. April 1st, another VC meeting is what you're saying.
Before that, by March 10th, another video conference will take place.
Yeah.
And
the rates will
by
be
15th, we will be able to issue the notice.
Yeah.
Today's decision is a very landmark decision where now the flat buyers will have to pay only 5% for normal housing and 1% for affordable housing. And the way this affordable housing definition has been approved, it is going to cover a major portion of housing, particularly in the non-metros areas, and also in the metro areas at the expanding locations. So this is going to benefit the flat buyers, and it is also going to benefit the real estate sector, where the flat buyers were postponing their decisions and waiting for the completion because the impression was that, and because on completed flat there is no GST, and therefore they were postponing the decisions, and that is why under construction flats were not being sold, and that was leading to a kind of the cash flow and then the stress in the real estate sector. Now this decision is going to be win-win for both the flat buyers as well as the real estate sector. The flat buyers will also benefit because in the existing scheme of 12% and 8% with ITC, there were we were receiving the complaints saying that the developers were not passing the benefit of the input tax credit by reducing their price to the consumers. Now what has happened is that this scheme ensures that 5% and 1% has already taken care of the input tax credit, right? And therefore that benefit gets automatically passed on to the consumers.
Okay, and as I said, we'll have a detailed discussion with guests as well as stock experts in just a few minutes from now. So do stay tuned to figure out what the impact on real estate stocks could be. The next piece on First Word is about UPL. Now, if you're wondering why so, well, let's tell you why. The decision to acquire Arista Life Sciences had investors worried, and it reflected on the stock. But some assurances by the management seem to have gone a long way in soothing investor nerves. The stock has rebounded to trade just 10% away from record highs. Darshan is standing by to tell us what's changed in the sentiment. Morning, Darshan.
Yeah, so basically let's break it up into two. This was the pre-Arista stock price, and that's the post-Arista. And when news flow started coming in a lot of media channels, the stock actually corrected almost 40%. So it reached a low of almost 550. This is the date in July when they actually went ahead and announced the Arista acquisition. Post that, there was a surge that happened. Again, there was some bit of concerns that came in, but the stock now trading near record high. So it's just it's definitely trading at a 52-week high, just 10% away from an all-time high. So that's what the all-time high is 902.50. So that means just 10% away from an all-time high. So UPL stock seems to be doing well as of now. So that's the thing that we are talking about. What exactly has happened? First of all, let's take a look at how the performance has been in terms of over the past few quarters. So basically, if you're looking at it, margins again close to after declining for the past 3 quarters, the third quarter saw margins move up to almost 20.6%. Revenue growth actually coming in almost 4,900 crores of top line in the third quarter. And remember, fourth quarter is the best quarter for them. So I expect the street anticipates that again in the fourth quarter the numbers probably will be much higher than what it is. So that's the revenue trend that we are seeing at this point of time. The debt seems to be the concern now. Now what has happened is that debt had been rising for FY19, and from 6,600 crore it went up to 8,100 crores. Now the debt was taken on account of the Arista acquisition that happened. A lot of concerns were there that whether this debt because UPL has a history of buying companies at a smaller valuation. Arista was a huge acquisition for them. So what happened was what Jay Shroff also post the acquisition, he spoke to us, and these were some of the points that he made, and he tried to allay Arista concern. He's saying that they will look to repay the $3 billion debt within the next 3.5 years. The interest burden is not more than $120 million on a large $4 billion acquisition, and the interest rate is less than 4% or close to 4%, and that is something that went a long way in allaying a lot of investor concern that synergies will actually come in, and the concerns in terms of debt aren't that huge. What's happening as far as the synergies is concerned? How will this help? First of all, it enters the big league with improved scale and capability. From the 8th largest agri company in the world, it becomes now the 5th largest. A lot of comments were given in terms of how it will benefit in terms of the scale, in terms of cost benefit. So how will it benefit for a $250 million additional cost savings, which will lead to EBITDA? These are what the management is saying, that they will bring some of the production of the Arista molecules in-house, so that will benefit them significantly as far as cost is concerned. Joint procurement of raw materials, both with a larger volume, both for UPL and Arista, that benefits them significantly. And plant and people rationalization is something that will aid them as far as their cost synergies are concerned. In terms of revenue synergies, they are saying anywhere between $350 to $400 million in the next 3 years. First of all, cross-selling of products will help them significantly. There are some areas in which UPL is strong, and some geographies. So like UPL is strong in India, America and Western Europe, while Arista is stronger in areas like Africa, Russia and Eastern Europe. So there is definite synergies that will happen, both of them. Integration of niche crops and product segments is something that we can look at. There are some products that UPL doesn't have. There are some products that Arista doesn't have. So the merger synergies actually is impacting them for the better side, and that's how they believe that revenues synergies will come in.
But some concerns still remain, Darshan. And what about valuations? Yeah,
so some concerns definitely are there. If you're looking at it, if you saw what happened in the third quarter, India business was very weak. When the entire export market grew, they saw a decline in their India revenues. They attributed it to weak farmer spending and product restrictions in some states. Volume growth was 6% compared to 8% that we saw in the first half. So there seems to be a little bit of impact as far as the numbers were concerned. But the other thing is, and the market needs to be concerned, that if the Arista acquisition is already completed as of third quarter, if the synergies don't come in, there's a serious amount of de-rating that could happen as far as the UPL stock is concerned. So that's the concern that streets are looking at. Valuation wise, not the most expensive on an FY19, 20, 21. If you look at the FY20, 15 times price to earning on a consolidated basis, that's the earning. If you compare it to the peers, as far as the peer is concerned, it trades much lesser than some of the peers that is there, like a PI Industries, Monsanto, Biocrop, Excel Crop Care. So it's trading at reasonable valuations compared to its peers, but much more than Sharda Crop Care, Rallis and Dhanuka. But remember, UPL is a niche player in the market, so that's the trend that we're seeing. The street, however, is still bullish after a big move that we've seen in UPL. The street still believes there's a potential 8% upside that is there on UPL. The street, however, there's a consensus view that almost 90% of the street does believe that UPL should be bought. 1 believes a hold, 4% believe a hold, and 7% believe that it's a sell at this point of time.
Okay, Darshan, thanks for that exhaustive update on UPL. If you wanted to know why UPL has gained a lot of ground, these are probably the reasons. Last piece on First Word, and I'll go through it very quickly. Warren Buffett wants to spend Berkshire Hathaway's $112 billion cash on giant acquisition. The ace investor doesn't see one happening anytime soon. The Oracle of Omaha says prices are sky high in his annual letter to shareholders. So thought bring out the 5 or 6 points that we thought were the most important ones. So firstly, he mentioned that Berkshire will forever remain a financial fortress, and in managing, he will make expensive mistakes of commission and will also miss opportunities, maybe some of which would have been obvious. At times the stock will tumble, but he will never risk getting caught short of cash, a position that he's held steadfastly through his career, and more so currently when everybody's questioning about what is Berkshire Hathaway doing with the oodles of cash on its books. Buffett does speak about a very important thing, something that he's been reiterating now for the past 2 or 3 meetings, and which is the big issue. And in the year, he mentions that in the years ahead, we hope to move much of our excess liquidity into businesses that Berkshire will permanently own. The immediate prospects for that, however, are not good because prices are sky high for businesses possessing decent long-term prospects. This is something that equity investors and Buffett fans worldwide will take note of for sure. He did mention that they are ready for an elephant-sized acquisition because while 2019 will likely see them expanding the holdings of marketable equities, they will continue to hope for an elephant-sized acquisition. But seemingly 2019 will not be a year when they'll be able to do that. This is a very interesting thing and has resonance throughout the investing world and all countries. The making of a fraud. Buffett says that what starts off as an innocent fudge in order to not disappoint the street, in order to meet the quarterly expectations, trade loading at quarter end, turning a blind eye to rising insurance losses, or drawing down a cookie jar reserve can become the first step towards a full-fledged fraud. And a lot of these things have happened in the past, in the recent past, maybe pertinent reference. A small point then they mention about insurance and how at Berkshire Hathaway they continue doing what they've been doing as a religion, Old Testament style, disciplined risk evaluation, daily focus of the insurance managers, more so from their insurance business perspective, frankly, but something that they've been doing and continue to do going ahead as well as a piece of religion. Something that he advises everybody to do, which is to doing what everybody likes. So he mentions that for 54 years, Charlie and I have loved our jobs. Daily, we do what we find interesting, working with people we like and trust. And now our new management structure has made our lives even more enjoyable. Tap dancing to work, something that Buffett is very well known for. And lastly, they mentioned that Berkshire Hathaway is future ready. It's had some drawdowns in Friday's session because of Kraft Heinz, but that notwithstanding, Buffett says that with the whole ensemble, that is, with Ajit and Greg running operations, a great collection of businesses, a Niagara of cash generation, and a cadre of talented managers and rock-solid culture, your company, which is Berkshire Hathaway, is in good shape for whatever the future brings. Nothing too surprising, but for that small nudge on corporate fraud and the fact that they believe, or he believes, that valuations still remain sky high. That was Warren Buffett over the weekend for you. That's all that we have on First Word today. Lots more lined up for you on IndianOpen. We talk about the agreements that Bharat Electronics signed at Aero India show with Anandi Ramalingam, discuss GST rate cuts for under construction properties with Pankaj Kapoor of Liases Foras and Sangeeta Prasad of Mahindra Lifespace developers, and speak to Umesh Revankar about Shriram Transport Finance's fundraising activities, business outlook and more. Stay tuned.
Fulfill your dreams of buying a new house, new car, or achieving academic success. Attractive interest rates and easy processing. The trust, commitment, and excellence since 1937. Indian Overseas Bank, good people to grow with.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It
has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're watching IndianOpen right here on Bloomberg Quint Live. Quick check across Asia, and then we dive straight into our market conversation. Asia's pocket is doing well, particularly Shanghai, though they've come off the highs of the day. That's an interesting number. There are more than 2% gains on Shanghai on the back of that pushback of the deadline for tariff increases. So looks optimistic for our markets. SGX Nifty is trading absolutely flat. No major cues coming in from there. 10,808 is where we are at for the SGX. For Nifty, Friday session and the entire last week was not a bad week. The second half of the week in particular, saw a pullback, and you saw the losses that culminated in the first 2 days of the week getting wiped off and finally shut shop with gains of about 0.5% plus. Bringing in Sameer Kalra, he's joining in. He's the founder at Target Investing. He's joining us right now on the show. Sameer, good morning to you. And the big mover today, if at all, they've already not made their moves prior to the announcement, is the entire real estate pocket and the housing finance companies.
So I think that's a positive move from real estate end of it. Right now what was happening, that 12% GST which was being applied to real estate, the end customer was not willing to pay that enough. So they were the developers who were taking the burn of it. And I think this rate cut eases off to some extent. But if you see on the whole picture, the non-affordable one, the other than that, they were already paying 4% if you include the input ITC. Now they end up paying 5%. So that's an increase of 1%, but on the overall, it eases their cash flow situation. And on the affordable side, the plus point is they've increased it to 45 lakhs. They've increased the area in non-metros and metros. To that, I think it benefits more towards the HFCs because their ticket size increases. They're easier to, give more of LTV. Because right now, even if 45 lakhs was my cost of the house which I was buying, I could only see the affordability till 30 lakhs. So my LTV automatically came down. So I could only give 24 lakhs or 25 lakhs. Now that automatically goes to 35 or 36 lakhs. So that gives a big boost to good HFCs who can, raise funds today for that growth. So I think it's a good boost overall, but it'll take a couple of quarters.
Do you think it's a boost for probably not the developers focus only in Mumbai, but the smaller cities more so?
Yeah, I think, see, over there, what is the problem right now, whatever is getting sold
like a Prestige or Soba.
See, they will benefit, but the only point is that demand doesn't get calculated on just on the GST, right? The demand is on the funding side as well for the consumers. So till that time that doesn't get sorted out, I don't see a boost of demand just because of a GST cut coming in.
What would you buy? What would you sell?
So in this pocket, we've already bought Oberoi Realty. We want to stick with that because the cash flow situation of these companies are a little vary.
But that's got no connection to GST, right? Because GST doesn't benefit Oberoi per se.
No, they do. Because if you see the Mumbai one, the 5% one, right? They have a lot of upcoming inventory, which is under construction. And these are big projects. So they save around 600 to 500 crores on that unsold or under construction inventory, just on the hit of it. So that's what I'm saying. So they are bearing the burnt of GST right now. So their cash flow improves. Their P&L might not improve, their revenue might not improve, but the cash flow on per flat sale improves for them. So I think for Oberoi, this is a much better booster because eventually you have to complete the construction also. That is getting more difficult for medium-sized companies.
Okay. So that's real estate. Lots more to talk about. The key stocks in news, some brokerage calls. Let's get in our research team to talk about all of those. Mishika, Nikki, as well as Somit. NMDC, remember, reports suggest there's hike prices. Adani Ports is in news, and a clutch of other stocks in news as well. Good morning to all three of you. Mishika, let's start off with you. The stocks in news.
So let's have a look at the stocks we need to watch out for today. Syndicate Bank files insolvency plea against State Trading Corporation of India for rupees 625 crores. Then we have Suzlon Energy clarifies that it is exploring multiple options for debt reduction along with its lenders and won't comment on market speculation. 98% of Jet Airways stakeholders vote in favor of conversion of loan into shares, increase in authorized share capital, and alter articles of association in extraordinary general meet. And company says additional 2 aircrafts have been grounded due to non-payment of amounts outstanding to lessors under their respective lease agreements. Now let's look at the takeaways from the Reliance Power investors meet. Thermal portfolio of Reliance Power operated at 81% PLF versus national average of 62% PLF. It expects to achieve resolution of regulatory issue aggregating to rupees 5,000 crores. The company says it is financed conservatively with debt equity ratio of 1.4 times. Then Motilal Oswal Financial Services and IIFL Holdings explore legal options of SEBI order related to NSCL scam. The company believes that the order will have no impact on overall business activities of the group companies. GVK Power to acquire 13.5% stake in Mumbai International Airport Limited from Bidwest for rupees 1,247 crores. The company will acquire 16.2 crore shares at rupees 77 each. Post acquisition, GVK will have 64% stake in MIAL. Then we have Adani Ports to acquire Adani Agri Logistics Limited from Adani Enterprises for a cash consideration of 946 crores. The deal is expected to complete by March 31st, 2019. And is subject to regulatory approvals. The deal will not require approval from minority shareholders as the acquisition is done through a wholly owned subsidiary, Adani Logistics Limited. Adani Ports will also take in net debt of close to 700 crores on its books, and the enterprise value of this deal is close to 1,662 crores.
Okay, a bunch of stocks to monitor. GVK Power, interesting one, up 19% in Friday's session. Adani Ports, an interesting one too. So let's wait and watch what happens to these companies. We'll of course watch out for IIFL and MOSL too, but we'll watch out for NMDC as well, Nikki.
Finally, a price hike has come through after the global rally that we've seen in iron ore prices. NMDC has undertaken a price hike after 3 consecutive months of price cut, in which the company undertook a cut of nearly 4 times in this 3 months time period. Lump prices with this hike is the highest that we've seen back in September 2018, and fine price hike is the highest that we've seen since Jan 2018. Now the hike tracks. Now there are two triggers behind this move. One is the global iron ore prices, and second, importantly, is the Odisha miners going ahead and taking a price hike of nearly 250 to 300 per ton at the start of the month, which has triggered a price hike even from NMDC. What BofA ML has to say, it has maintained a neutral rating on the counter and has suggested a target price of around 96, which indicates an upside of more than 20% from the current market price. And with this, the premium has actually shrunk between the NMDC price and that of landed cost of imports have shrunk to 14% as compared to 22% earlier, but still remains at multi-quarter high, which in turn gives the company enough room going forward, at least in the near term, to go ahead and take a price hike. But then the long term, we expect some challenges to be there on account of oversupply in domestic market.
Okay, let's wait and watch what happens to NMDC today after a long time, some price hikes coming in. But metals is not just about NMDC. Morgan Stanley is extremely bullish on the steel players.
Well, yes, it has come out with this big note on the Indian metal space. Now, if you see, according to the brokerage, the steel companies' earnings are expected to accelerate on the back of domestic demand and price hikes. Now, along with this, the stock valuations also look attractive and could be supportive for the stock prices, says the brokerage. And on the back of this, it has upgraded the rating for 3 steel companies, that is Jindal Steel and Power, JSW Steel, and Steel Authority of India Limited, and have also hiked the target price. Now for JSPL, it has hiked the target price to 188. For JSW Steel, it has hiked the target price to 296, and for SAIL, it has hiked the target price to 54 from 53 rupees. However, the brokerage is not so positive when it comes to the companies that deal with non-ferrous metals, and that is mainly on the back of lower commodity prices, which could potentially drag the earnings going forward. Now for Hindalco, it has downgraded the rating to equal weight from overweight and has cut the target price to 211 from 290, and for Vedanta, Vedanta, it has maintained its equal weight rating but has cut the target price to 176 from 235. Lastly, for Coal India, Morgan Stanley continues to remain positive on the back of firm e-auction prices, cost control measures, and because of its net cash position. However, it has cut the target price on Coal India to 268 from 296. Now, the second note we have is on SBI, where UBS has upgraded the rating to buy from neutral and has hiked the target price to 360 from 313. According to the brokerage, a lower credit cost and operating leverage would boost the company's return on equity to 13% by FY20 from an expected 3% in financial year 2019. It also says that the bank is the best position in terms of deposit mobilization due to its large retail franchise. Lastly, it is also expecting the bank's credit cost to income ratio to come down by nearly 370 basis points due to branch rationalization, decline in staff cost due to attrition, and because of absence of one-offs that we have seen in earlier years that would aid the company's cost to income ratio, banks and cost to income ratio.
Okay, let's wait and watch. Thanks a lot, all three of you, for joining and giving us those perspectives. Sameer, maybe I'll start off with the brokerage names. The commodity arms declared, the application declared not fit and proper, and therefore those applications will get rejected. The companies told Bloomberg Quint that their commodity operations as well do not get impacted. So no business impact as of now. Do you believe there could be a stock impact though?
So I think that order, if you see their commodity revenues, even as 2018 annual reports, they're hardly 0.05% of revenue and 0.07% of PAT on the both Motilal and IFL both. And if you see, I think the other part which is overhang for me, at least from my point of view, is the fine. If there is any kind of fine on these kind of orders or this investigation, that becomes an overhang now, because any which way you've declared them not fit and proper. And secondly, if you see the system, there will be a clientele, maybe a churn, or somewhere the movement will happen towards other brokers who, because clients want to have an exposure with the commodity and equities at the same place. So I think there can be a smaller short-term impact, but overall medium and long-term, they have a liquidity issue, which I think is a whole separate issue which they are running from. And I think that is much bigger for them. So I'll stay away from these names, even if I get it cheaper right now.
All right, Sameer, just stay on with us. Bharat Electronics signed several defense pacts on the sidelines of Aero India. BEL has also inked an MOU with Bharat Forge, which now has plans to make jet turbine engines and drones. To give us more details about the agreements, joining us on the phone line is Director of Marketing, Anand Ramalingam. Mr. Ramalingam, thanks very much for joining in. Put into perspective what this MOU would entail and how big is it for you?
Good morning to all of you. As you are aware, BEL is an R&D driven company. We plow back about 8 to 10% of our turnover back into R&D. Hitherto, in our efforts to enhance our R&D capabilities, BEL has been collaborating with many reputed academic institutions as well as government-owned research labs in India for development of core technology modules. We are now trying to have similar cooperation with foreign OEMs with an idea that we will be able to reduce the time to market and also to get a full foothold in the export market. So one such initiative we have taken with an understanding with this company called Elettronica, which is based in Italy and is a global player in the EW segment, that is electronic warfare segment. So we are planning to have a joint development of futuristic technology building blocks for various EW applications. And we have agreed to collaborate on development of the EW requirement for a naval platform and a UAV platform. So the model is that both of us invest in bringing out these products, and as and when the product gets matured and it is trial evaluated, both of us will be sharing the manufacturing on a 50-50 basis for both the Indian and the foreign export market.
Got it. Mr. Ramal, okay.
Yeah.
So, Mr. Ramalingam, good morning. What does this mean in terms of some numbers that you can share, some revenues, some sight of when do they start coming in, if at all they do in the near future?
It will take about a year and a half for us to complete the development, at least a year and a half. And then there is a huge requirement. This will be used in most of the helicopter programs of India as well as the other export markets, and at the same time for the UAV platforms. So we are trying to standardize and bring out a building blocks which can be used for both these applications. So the potential is quite large. I will not be able to give you the exact numbers, but it will run into thousands of crores.
Right. All right. So definitely a big opportunity coming in for the company.
Yeah.
All right, Ms. Anandi, thanks very much for joining in. Appreciate you taking out the time this morning. A quick update coming in from BEL. Samir, in Friday's session, obviously, and with the way that we've been seeing crude oil prices move, the top four, within the top four list of gainers on the index, you had all your three oil marketing companies, HPBP, IOC, 3.5% to 4.5%. Just on the back of what crude oil is doing, is that making investment sense?
The OMCs?
Yeah.
I don't think so. Because over there, what is happening, the margin squeeze is much even getting worse off. If you see the crude prices, they are now at 67. And if this kind of deal, US and China deal fructifies, I think over there the crude prices can hit 75 plus very soon. So I think that's not good for OMCs because they'll come to a place where their price hikes will be taken back before elections. So that is a major risk for them. And even till the GRMs don't improve on the Singapore end as well, I don't see any relief to them. Yeah, the valuations have gotten cheaper, so there might be bounces coming back. But I don't think so that's a buying opportunity as of now.
Just for the fact that they will be seeing inventory gains for themselves, apart from the fact that, when crude oil came from 86 to 65, their inventory losses were also not to the tune where they posted losses in quarter three. They actually posted gains, even on the back of, the volatile crude oil prices. So does that add a little bit of a kicker, is what I meant to ask you initially.
But see, those inventory gains and losses are second priority. The first priority is the GRMs. If the GRM improvement is not there, even the inventory gains which they have, that gets discounted by the markets. So I think the most important number is the movement of quarterly basis GRM numbers, which is on a slighter up, but I still think we are in March is there to play, and trade deal is more important right now from my point of view.
Okay, 8:50, time for our special segment, Bloomberg Edge, wherein Darshan Mehta today joins in to tell us about a pattern that the Bloomberg terminal has thrown up on a stock. Darshan, what's the stock on your radar today?
Yeah, so the stock today is GETND. So what has happened is the counter has shown a significant amount of move. If you see the last two trading session, 4% moves coming in each day, so it's already moved up 8%. The indicator that we're using this time is Trender, so it's within 1% of the Bloomberg Trender proprietary indicator called Trender. It actually generates a buy and sell signal, and it helps to manage stop losses. So when the indicator turns green, that is the time you start buying, and when it turns its color from red to green, from green to red, that's the time you sell. Now what we've seen is that on GTND, that is just within 1%. Now what we've seen is 301.33. So if the counter manages to close today above the 301 level, this indicator, which is red, will flip into green, which gives a buy signal. So that's the trend that we're looking at GTND. So that's the Bloomberg indicator. If you look at what has happened, if you look at the historical performance, the next 10 days probably will be muted. It won't move that much. But look at the last time it managed to move in from red to green. It actually rallied 40% after it actually changed its color from red to green. So that's something that you need to watch out for. The last two trading session, it's moved up on decent volume. So there is definitely a lot of traction that's seen. The success ratio isn't very high. Last 2 out of 7 times it gave a positive on the green side, it gave a positive signal. But the main reason that the focus is there, because last time this happened, the rally was very high, almost 40%.
Wow. Okay, we'll watch out for this. The past history is positive. Let's see if this one can do well this time around as well or no. Thanks, Darshan, for that. For a deeper insight into Indian equities, visit BloombergQuint.com, where you identify technical triggers that have emerged on a specific stock or a sector every day. On today's Bloomberg Edge, which gets featured on that piece, we feature ICICI Prudential Life and what its open interest and relative rotation graphs indicate. That is a BQ Blue exclusive. Well, since we're talking about charts, let's get in our technical experts on board. Brijesh, Bhatia, Head of Research at Deal Money Securities with us, as is Ruchit, Jain, Technical Analyst at Angel Broking. Gentlemen, both of you, good morning. Thanks for joining in. Brijesh, quick thoughts out here. We're 5 minutes away from market open. Your index strategy for the day.
Yeah, good morning, Neeraj. I would like to go long on Nifty at around 10,790 spot. If you look at the momentum, we have seen a strong comeback from Nifty. And I think this rally, if you look at from 11,100 to 10,000, sub 10,600. So I think 61.8% could be the test on CART, which is around 10,880 on spot. So I would look for long opportunity at the opening, keeping the target of 10,876 on the upside, and stop loss for last couple of days would be 10,000, low would be 10,740. So that would be my stop loss for the momentum based trade, target of 10,876.
Okay. Ruchit, what is your index strategy for the day? Good morning.
Yeah, hi, good morning everyone. If you see then the recent consolidation support of 10,600, 10,580 has played its role during last week. We have also seen formation of a bullish morning star pattern near this support. So definitely the biasness is going to remain positive from this expiry perspective. But Neeraj, if I look at some of the options data, then 10,700 put option now has the highest open interest of about 35-36 lakhs, which indicates that at least for this expiry till Thursday, 10,700 is going to act as a support base. While the highest call option open interest is at 11,000, we have also witnessed good OI addition in 10,800 and 10,900 call options, which are around 30-32 lakhs. So looking at this data, it seems that this pullback move could extend towards 10,850 kind of levels. And till expiry, markets or on the Nifty front, we would see trading within the range of 10,700 to 10,900. So my strategy is from the expiry perspective. Since this is an expiry week, one can look to sell triangle on the options. 10,900 call, which is the higher end of the range that we are expecting, that could be sold, and 10,700 put, where the highest open interest is that could be sold. If we sell both these options, then you get a combined premium of 60 rupees. Keep a stop loss of 98 rupees on the combined premium, and you can sell this to we believe that this would become zero by Thursday.
Let's get in some stock strategies as well, and Ruchit, I'll keep it with you for your stock ideas.
So firstly, two sectors that we are expecting to outperform in near term. One is metals and other is auto. Metals, we have seen good momentum building in, from last week as well. So I think this momentum is likely to continue. JSW Steel would be my trading pick at current levels. One can go long on JSW Steel with stop below 272, expecting target around 310. And auto index is trading at its support, wherein a positive divergence has been seen in the RSI on the daily as well as the weekly charts. So we have also seen good amount of short positions, and we could see some short covering moves in stocks within the auto space in this expiry week. M&M, similar to auto index, though this stock is trading around its long-term support and some divergences has been seen in M&M. So I would recommend M&M from this space to go long on from a near-term perspective. Keep stop below 615, target around 699.
Okay. Brijesh, what about you?
I would also go long on two stocks. First is Yes Bank. So if you get the rally from 172 back to around 220-25 sort of levels, and even the bad news where stock has tested 201 levels, unable to breach the key psychological support of 200, and now back to about 220, breaking its 3-4 days of consolidation zone. So at around 222, one can look for targets of 237 purely from a trading side, keeping a stop loss of 215. And I think from a medium term point of view also, we think 255 is the levels one can look at 200 days average on the upside. From this week, 237 could be the targets. And second is the DMart. So if you look at the stock was post numbers, has seen a strong fall from around sub 1700 to 1200 levels, taking support at 200 is average, now showing a sign of good comeback on the bullish side. Even if you look at the MACD, is given a positive crossover, indicating that still a good upside is left on the stock. So at around 1487, one can look for target of 1620 on the upside, keeping a stop loss of 1425 on the downside.
All right, just 1 minute left to go. Samir, are you laughing to the bank with Yes Bank?
Sorry?
Are you laughing to the bank with Yes Bank?
Yeah, I am almost halfway through what I expect. So I think it's something which builds on. And
so 280, 290?
Yeah, as of now, on the short term, medium term, and let the results come, new management kick in, because there will be changes on the second line of management, that's for sure. So I think over there might be certain ups and downs, but I think now that major knee-jerk reaction is over, and I see an upside now.
All right, holding it since 180?
175.
175. Okay, so that's a good enough upside that we've seen on the counter. We've got just a few seconds left to go for market pre-open. Just a quick glance once again at Asia. Shanghai has actually picked up a little bit more, and Hang Seng has turned positive right now. So that's a good cue coming in there. But SGX has not moved much. So just 2 points higher. It was 10,810. It's just become 10,813 now. So no major change out there. On the Nifty 50 at pre-open, you're showing you a positive uptick. The Sensex up about 1.7%. Again, this will come off. Let's start off with the stocks before we move on to the broader markets and see how pre-open is shaped up there. Housing finance companies. Remember, it's going to be important for real estate and housing finance companies today. Indiabulls Housing Finance is up 9% right now. Again, it could be a trade which needs some consolidation. Coal India is up 2.5%. Vedanta is up 1.4%. IndusInd Bank 1% higher. Then you've got TCS, which is up 1%. We've got Eicher Motors up 1.7%. Indiabulls Housing Finance has cooled off as well, so just 1% now. Grasim, SBI, HDFC Limited. Then you've got a Power Grid. These are all up about 0.5% apiece. Tech Mahindra, Bajaj Finance. Yes Bank at 222. Then you've got Axis Bank, that's up marginally though. More gains than losses, but the quantum of gains are also fairly muted, not much. Amongst the losers, Adani Ports is the worst performer, but that too down with just 2% of a cut that's coming in there. And I think the focus is going to be on those real estate companies, Raj.
Yeah, certainly seems to be the case. Just before you move, let's first talk about the real estate names, then we'll move on to the macros, the currency and the bond yields. Should pull up Oberoi, Prestige Estates, Kolte Patil, that whole clutch of names, and maybe give them some time at the end of 8 minutes, likely to see the proper reaction of how the market believes these stocks could do. Remember, a fair degree of rally already that's happened into these names. So let's wait and watch what happens. Jet Airways firmly in focus today. For the opening rates show a downtick, but 2 or 3 pieces of news. Friday seemed optimistic, then the pilots gave a scare about not adhering to revised flight schedules. That should have been negative, and late last night PTI reported that SBI is mulling taking the NCLT route for Jet Airways. So let's wait and watch what's the impact on this stock. Motilal Oswal and IIFL, the two broking names, should also be in focus. Remember, the companies have said in a queries to Bloomberg Quint that there is no business impact of the SEBI order. However, is there a sentiment impact? I think the end of the pre-open session will anyway suggest, but let's wait and watch what happens there. Adani Enterprises is the other one from whom Adani Ports is actually buying that piece of business. Adani Enterprises looks like starting off 3% higher. And GVK Power and Infra, now you don't quite know what will happen, whether somebody else will buy a stake in MILE or GVK will add to that stake from one of the other parties. But GVK Power, the last 2 or 3 sessions has been on a bit of a roll, so let's wait and watch there. Last but not the least, before we talk about the macro cues, Reliance Nippon Asset Management, there's some news reports about somebody else joining in the fray as well. I would presume that the promoters would want to give the ROFR, if at all there is a deal brewing, to Nippon Life, and therefore I don't quite know what impact would this recent spate of news flow be. But for now, Reliance Nippon Asset Management just lying absolutely flat. The currency and the bond yields, remember the yuan is a lot more stable, and that should only augur positively. 71.02 for the rupee. The bond yield should be steady, no big impact because of what's happened, but 7.4190, so almost 7.42. This is what, 6 basis points higher than the policy day announcement, which was at 7.35 and went all the way to 7.31, I reckon.
Yeah, and then came back right down, and in the last few months actually it's been within that range of 7.36, 7.38 for the bond yields. So that's side we've seen some amount of weakness in bonds as well. Coming back to Jet, I mean, Sameer, while there are reports suggesting that SBI could take the NCLT route for Jet Airways, the shareholders meeting and the resolution plan got 97% votes for converting debt into equity. So on one hand, you have shareholders approving the resolution plan, and on the other hand, you have reports suggesting that SBI could go to NCLT with Jet Airways. A little bit of,
So I think over there, somehow I feel Etihad is playing the influential factor. Because over there, if you see the debt conversion, and SBI will be only willing to take a debt conversion when it sees the exit on that debt conversion at maybe a lower price or whatever, it sees an exit, because it really doesn't want to play a part in operating airline business, which they know doesn't really work out well. And over there, maybe because Etihad is somewhere still in a kind of a situation of deciding how to approach this.
Sitting on the fence.
Yeah, and they're trying to wobble with it. And if you go to NCLT, then the whole approval of EGM and debt conversion really goes out of question. Because why will I do a NCLT and debt conversion at the same time?
Because you've placed a resolution plan, you've got the shareholder approval, so it's not like you're not doing anything to get...
Yeah, but the only point is it's only shareholder approval. Now the guys who are owning to the debt, the main lenders, they have to decide what route to take.
Nonetheless, they have 180 days.
Yeah.
That's all the time they have.
They'll always do it according to the exit they see. Because if they take it to NCLT and no one comes to bid out here, and it eventually goes to a liquidation process, then what happens? So I think they'll be more depending on the Etihad or NIIF to see where the exit they get, and accordingly they'll plan it now. But till that time you'll see, a lot of operational issues with them, because pilots, the aircrafts being held. So there'll be a lot of operational issues for them.
So, but you're not taking a call on the stock as of now, I presume?
No, if you really want to take a call, it's a short-term trade on the upside.
On the upside?
Yeah, because the only point is now whatever happens, SBI will take a call in next 3 months. So I think they don't have any choice other than that.
Okay. Sameer, what about Adani Ports, the related party transaction? Brokerages say it's happening at a valuation which is slightly higher than what their comfort zone would be. Big impact on the stock, or no, not quite?
So I think it will be negative impact, because any kind of related party transaction now comes into purview of corporate governance. So and even
they're buying a good business.
But see, they could have bought it at the listed company level. That makes minority shareholders much more convenient or much more worthy of that vote. Because the only point is the valuations and the cash flow, and what kind of what kind of a part are you taking on, what kind of debts are you taking on, what kind of a cash flow you're taking on. These kind of revelations actually happen when you're taking on the listed firm. When you're taking it through the subsidiary, it's not the choice of the minority shareholder to ask for it. It can be only revealed once the transaction gets done.
Yeah, well, that's true. And I think a couple of brokerages have cited this, that because it's a related party transaction, maybe it's expensive. Should minority shareholders have been consulted? In fact, the brokerage verdict on Adani Ports is interesting. As we speak, it's an index stock, and which is why it becomes very important. Citi, Bank of America, Merrill Lynch, all of them came out with their verdict, saying that this is not looking all that great from a Adani shareholders, minority shareholders perspective. It raises question mark about the allocation of cash. Remember, that was the big overhang over Adani Ports in the past as well, wherein money was given to related party companies. And then the brokerages today have come out and given a verdict saying that they do not quite find favor with this move. And as a result of that, a 7% slam dunk on Adani Ports today. Should we get just get a technical perspective out here on Adani Ports? Ruchit, do you want to come in? 7% lower today.
So I think if you see last week, then the stock prices gave a pullback from its lower level, but I think it was still below its resistance of 360, 365 range. So that was just a pullback move which may be behind us. I think if we see a follow-up move post 7% gap down today, because Neeraj, as I have always said in the past also, that rather than gap down or gap up openings on the back of overnight news, what the follow-up move is, that is more important not to analyze. So if we see a follow-up move today post this gap down opening, then I think we should see the stock heading further lower, even towards the recent lows, which were around 320, 327.
Okay, just one last question, Sami, before we let you go. Like you had highlighted that Yes Bank was one of your preferred picks, which you started accumulating at those levels. Anything else now that pops up for you that is worth a buy?
So another controversy, Tata Motors. So I think for us, that's a buy as of now. Because if you see, there might be a couple of more quarters where the pain might come in. And the demand is there on the low side, and the capacity utilization is hurting the JLR numbers. But I think the cash flow improvement is there on JLR side, because last quarter they paid 700 million pounds for a debt bond redemption. So I think over there cash flow is the priority. The cutting of expenses is a priority. So I think next couple of quarters will form a base for them. And this kind of a knee-jerk reaction which they did on the quarterly and the stock did generally forms the lower end of the stock and for the company. So I think now it's only a little positive or a little negative. So I feel the risk to reward is much better as of now.
Okay. Tata.
Sorry?
Tata. You have a question for me?
No.
Okay. So we'll thank you on that note, Samir. Thank you so much for joining and appreciate your time. Dhananjay Sinha, Head of Research at Emkay Financial Services. He's also joining us on the show. But before that, just want to get in a few more chart checks going from our technical experts, and then we get in Dhananjay Sinha as well. So I'm going to start off with some of these IT companies. Ruchit, I'll come to you. We've got emphasis now once again above 1,000. Within the mid-cap IT lot, between an emphasis, a Hexaware, a Mindtree in the news as well, KKR looking to pay, for Mindtree's stake. What's your sense on whether or not you would be an investor in this pocket, and whether trades are likely here?
So then if I see the recent last at least 4 to 5 months, what has happened that within the IT space, the large cap stocks have shown good outperformance. To name all those, within the IT space, Infosys, HCL Tech and TCS have shown outperformance, whereas some of the mid-cap IT names, along with the broader markets, they have corrected very significantly. So I think, going ahead, even if the IT space continues to show this positive momentum which we have seen in the recent past, the large cap space would continue to outperform. Within the mid-cap space, if I do some comparative analysis, then the relative strength, the highest relative strength within the mid-cap IT space is now with NIT Technologies. And I think if I have to pick up any stock within the mid-cap IT space, then I would avoid no other names, but rather recommend buying NIT Technologies even at current levels. I think from a short-term perspective, the stock has potential to go higher towards 1350, 1360 kind of levels. So at current levels, within the mid-cap IT space, NIT Technologies could be bought keeping stop below 1220 for targets around 1360, and within the large cap space, HCL Tech, I think this is an impulsive up move which we have been seeing now. So HCL Tech could show some good outperformance.
Okay, minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. The GST Council has approved lowering tariffs for under construction projects from 12% to 5%. The council also cut rates on affordable housing. The stocks likely to start off in the green.
2 additional Jet Airways planes get grounded due to non-payment of amounts outstanding to lessors under their respective lease agreements. Meanwhile, SBI mulls insolvency route to recover loans.
SEBI deems commodities arms of Motilal Oswal Financial and IIFL not fit and proper. Both firms to explore legal options. Say order has little impact on overall business activities.
Adani Ports to acquire Adani Agri Logistics from Adani Enterprises for a cash consideration of 946 crore rupees.
And Morgan Stanley says steel companies' earnings are set to accelerate, led by domestic demand and price hikes, but downgrades non-ferrous metal companies, reflecting risk from commodity prices. Well, let's take it to Dhananjay Sinha. Actually, we hardly have time, but Dhananjay, quick 30-second view if you can, and then we'll do an extended chat with you. Just one quick word. Did Adani Ports get discussed in the morning meet today? It's a related party transaction, index stock. The stock is down 7%.
Yeah, I think with the acquisition that they have actually done of the subsidiary in the agriculture logistics space, I think, that is something that people will be questioning about, because the Adani port itself has been a cash flow generating company, and this other subsidiary is actually highly laden with debt. So I think the purpose of acquisition is something that is something investors will question. I think that basically reduces the return ratios for the consolidated company. So I think this is definitely a negative news at the margin. We'll see how it pans out. I think there is a sort of not so much of a congruence in terms of the businesses that they do. So possibly this is with an objective of future growth and what they want to do eventually. We'll have to see. At this juncture, it appears to be a burden on the coming from the acquisition.
Certainly seems to be, and Dhananjay will talk about this more because this is an index stock which has fallen 7%. It's not another ordinary name. We'll take in opening thoughts from our technical experts or on the top calls post-market open, because the market's just about to kickstart trade. A start which is marginally in the green, if at all. Yes, about 0.25% in the green. The Nifty Bank actually doing reasonably okay, about 1/3%. So it's not a bad start, I must say. It's much better than what the SGX Nifty was indicating. Let's see if we hold on to this ground or no. The mid cap and the small cap industry should come up on your screen. About 0.5% for the mid-cap space, about 1/3% for the small-cap space. Well, it's not a bad start, I must say. Bring up the heat map and let's see what's happening. Adani Port should be right down there. So this should be the big stock to monitor. Actually, it's not down 7%, about 5%. But let's wait and watch. This raises a bit of a boogie in the eyes of investors, as Dhananjay was saying as well. And we'll talk more about this, but 4.5% lower. Aside of that, not too many other stocks which are correcting. BP, HPPB marginally so, but otherwise it's okay. It's not too bad. What's gaining? Indiabulls Housing Finance and Yes Bank, both of them up and about. Metal names doing okay. JSW Steel about 1.5% higher. But Morgan Stanley upgrade coming in there. Yes Bank continues. Tata Motors and Maruti continue. So clutch of names doing okay. Not too many heavyweights down in the red. Adani Ports the top loser. That sums up what's happening in the Nifty on open at least. Let's see what happens during the course of the day. A couple of pockets that I want to highlight. Stocks which are in focus according to me, not necessarily just the newsmakers, but stocks in focus. Firstly, the Reliance Nippon and the Reliance Capital names again in focus. Lots of news flow surrounding them. They're starting off in the green. Let's wait and watch if there is more in store. Stocks which are trading close to 52-week highs is one, but stocks which have done, which were trading low and are now starting to move up. So Morgan Stanley, for example, has turned bullish. JSPL, SAIL, JSW Steel, all three of these stocks have been upgraded by MS. It's a big note and it's having a little bit of an impact on these stocks. Let's see if there is more in store. What about you, Devina?
Let's start off with GVK Power and Infra. So looking to pick up a stake in the Mumbai airport, and the stock's up about 8.5%. But remember, last week the stock anyways moved up 40-45% in a matter of 2 or 3 trading sessions, with upper circuits of about 20% on 2 consecutive days. Real estate counters, all of them. DB Realty up 4.25%. You've got Suntec Realty, Brigade Enterprises, Prestige Estate, Goldridge Properties, Oberoi Realty. All of them, you name them, and they've got gains of 3% plus at least. For these counters. HDIL2, that's up about 4% in the session right now. Rain Commodities, non-real estate, but that's up about 5%. Divan Housing Finance Company, so let's focus on that too. So that too is doing well. Divan Housing Finance, Indiabulls is anyways doing well. Then you've got a Camfin Homes, LIC Housing Finance, PMB Housing Finance, Repco Home Finance. All of these names are relatively active in today's session. We've got Group Finance too, which is up 1.7%. Gujarat Gas, Jindal Stainless, Gati, these are some names that are active. Tata Motors DVR, that's moved up about 1.4% as well. Market breadth looking positive this morning. Arcom down 5%. You've got Jet Airways down 4.5%. 2 more of its aircrafts getting grounded for non-payment to lessors. Then you've got Suzlon. The stock was active last week. Friday session, I think, was up 25%. Today, giving up muted performance, slightly flat. Godrej Future Consumer, that's down 1.3%, and Adani Enterprises is down 1.2% as well. 853 stocks advancing, 331 stocks declining.
Well, let's take in opening thoughts from our technical experts before we let them go and then continue our conversation with Dhananjay. Brijesh, to you first. Any thoughts on open, on the index or on a specific stock? Actually, even your top call for the day, we didn't get a chance to take that.
I think I would continue with going long on Yes Bank, which is around 223.23.5, and go long for the target of 237 to 38 on the upside, giving a stop loss of 215 on the downside.
Okay. Is there an index strategy? Nifty Bank is up about 125 points.
I think I would prefer Nifty because last week also on Friday session we have seen Bank Nifty slightly underperforming and resisting around 27,000 levels. So I think I will go for Nifty long at around 815 and at 20 spot, keeping a target of 880 on the upside. And now the stop loss could be around 772 on the downside. These are the spots levels, so one can trade accordingly in futures.
Okay. What about you, Ruchit? Any top calls?
There amongst the stock specific current, I would recommend going long on SRF at current levels. The stock has formed a bullish flag pattern as per technical analysis, and the prices are trading towards the support end. So the risk reward ratio is quite favorable over here. Keeping a stop below 2050, I would recommend creating long positions from next 3 to 4 days perspective, expecting target around 2300 to 2320.
Okay, we'll leave it at that, gentlemen. Thanks so much for joining in and giving us your perspectives. Really appreciate your time. In conversation with Dhananjay Sinha, he was referring to Adani Ports and his first answer and how the minority investors or the street might not take it well. And that stock is certainly correcting in the session today. Do watch out for that one. It's a top loser, down about 6%, 333 and counting. Dhananjay, the market is selectively starting to look a bit better, or selectively starting to turn a bit bullish on some of those beaten down names. If autos have seen a semblance of glimmer in the last week, metals are starting off this week well. There is a big upgrade as well that has come in. What is the Emkay view out here on the metal space? Price hikes are happening, valuations are attractive. Is it a good time to put money in?
Yeah, I think so. So I think if you look at it about a month back, there were concerns on deflation, especially with respect to the US. The market was generally talking about recession and stuff, and the issue and the concern from the US-China trade war. So I think that was weighing on the markets. I think that reflected a lot on the metal sector. So the metal prices had corrected, but I think if you look at recently, things have turned around. I think the break-even inflation, if you look at the US, has turned, 1 year maturity bracket, moved from -3% to +1.6. I think there is an upward movement in commodity prices. You've seen crude moving up to 67, and we are also seeing sort of percolation of that on the metal prices. So there is a certain amount of recovery as far as global metal prices are concerned. I mean, there are certain talks on negotiations that are happening between China and the US, and I think they are sort of coming up with a modification ahead of the March 1st sort of deadline that US has given. So I think there is some modification that is happening. I think the news flow appears to be positive in that direction. So I think if you look at the domestic markets, I think there had been correction in the metal space, the metal stocks that actually corrected. And I think if you look at locally also, there is an up move as far as local prices are concerned. So overall, I think with the valuations that we had arrived at after the correction, especially after October, I think we had come into a zone where the valuations looked attractive. We were looking at the last 10-year averages for PE and EV by EBITDA for integrated players, and we saw considerable amount of discount to the last 10-year average. So I think some of these positive news will translate into upside to the metal stocks, especially the integrated steel players.
Right. Dhananjay, within the NBFC pocket now, there is the slight kicker for housing finance companies. But what would you prefer if you have to break it down into consumer finance, your housing finance companies, your gold finance companies, auto finance? Which direction would you take?
So I think as far as the NBFC is concerned, we have a preference for consumer lenders. We have been underweight on housing finance company. So we maintain that. I think the news that came around on Saturday with respect to change in the GST, especially for the under construction projects, I think that has been a positive trigger for the realty stock, and I think there is a sort of a spillover of that sentiment onto HFCs as well. But I think the key issue that we are looking at is the liquidity aspect for the housing finance companies, and we believe that the liquidity in the system is in deficit. So if you look at the banking system, there is the LAF balance is in significant deficit, and I think the credit growth the deposit growth is not matching up to the credit growth. So you have a tight liquidity scenario. And as a result of that, since HFCs are susceptible to rise in short-term rates and the liquidity availability, I think such stocks will still be under pressure. So I think in the current context, I would say the consumer lending NBFCs can actually do better.
Right. Just to pull from that, and since you touched on the topic of liquidity, Maruti in particular, and within the auto pack itself, and we've seen volumes coming off, many believe that was a function of just liquidity being in a tight space, because the other consumer discretionaries had decent volume growth. So if you look at the paint companies, any of the other consumer discretionaries, the volume growth was not all that bad. So what suffered for the auto industry was probably the liquidity aspect, which played a bigger hand. Do you see that changing?
So I think that might be true actually, and I think most of the channel checks that we have done recently in the auto space, be it two-wheelers or four-wheelers, I think they are talking about a sort of a liquidity crunch and that impacting the volume. So I think that is what is being cited by most of the distributors and dealers. So I think that there is a substance, there is a truth in that argument. But I think the other aspect is also that there is you're coming on the back of a very strong growth earlier on. So I think there is a base effect also that is playing in this low volume growth that we have been seeing. I think going forward, it is important to understand that the government is pump priming. There is a good amount of spending that they are doing through the various schemes. Recapitalization of banks have happened, so they have announced a 48,000 crores of recapitalization for PSU banks under PCA. There is a sort of a relaxation as far as the GST is concerned. Also, that the government has sort of announced this PM Kisan Yojana. So I think there is good amount of flow that is happening, especially in the rural and the agri space. So I think there should be a pickup in. So the issue about the cash flow on the ground can actually be improved, can improve over the next few months. So I think from there on, I would say from that perspective, I would say that the issue relating to liquidity can actually wane, and then possibly there can be a recovery as far as the volume growth for auto space is concerned. So clearly two-wheelers and I think four-wheelers can see a bottoming out in the next few months.
As we speak, by the way, Tata Motors is up about 1.5%, and the metal names are the ones which are really rocking the charts. JSW Steel up about 2.5%. I reckon JSPL2 should be doing okay. That is that big upgrade really, and that stock is up about 3% too. So the metal names, courtesy, all that's happening around the world, plus the Morgan Stanley note, all of that finding favor. Dhananjay, my final question to you really, and I know you look at the banking space so closely, I just wanted to you to weigh in on which way or how do you think the jet issue will eventually shape up, because the news flow over the weekend has been all over the place, right? I mean, the Jet Airways statements Friday late evening, then the Pilots Guild saying that we might not work as the airline desires us to, and then news reports in the PTI suggesting that SBI may go the NCLT route. What would it do to Jet? What would it mean for the lenders?
So I think we don't cover Jet, so I mean my comments cannot be seen as a finality on this subject, but my sense is that the aviation stocks are under pressure. I mean, jet has been under pressure for cash flow reasons, but I think with the rising crude prices, I think the pressure can accentuate. I think the details of what is there as far as SBI's exposure, I am not really aware of that. So I think I would reserve my comments on those.
Okay. But just wondering, Dhananjay, over the next 6 to 9 odd months, are lenders in a sweet spot? A lot of cases are getting resolved. A lot of monies might come back. Is this, would you look a serious look at the two large leading PSU lenders?
So I think our team is somewhat positive on the SBI, but I would say that as far as the growth is concerned, I think there is a possibility of better growth, especially from a government standpoint when they have actually induced recapitalization loans. So I think there is about 48,000 crores that they have sort of infused. So there is a uplift as far as the PCA banks are concerned. I think overall, I would say resolution of bad loans is a positive news. So I think in the near future, let's say about 6 months' time, I think it looks better. But I would still say the key issue is with respect to the ability of banking sector to lend. So currently, if you look at the credit to deposit ratio, it is significantly high at 78%, and that with a very modest growth of credit at 15%. So key issue for the banking sector is the generation of deposits. So deposit growth is lagging considerably at that 9%. So you have the high level of CD ratio essentially reflects that the ability of the banking sector to grow very fast is actually limited, and as a result of that, the yields might actually go up. So the liquidity tightening might still remain. So that's not a very positive sign for the PSU banking stocks. So I think some of the things that you mentioned about the asset, NPA resolution, etc., is a fair point. There is certain amount of recapitalization that is also happening. We'll have to see how PSU banks can grow going forward. Are they going rapidly or not? I think the key issue is whether you have the liquidity support to grow going forward or not. So we'll have to see. So my preference remains for the private lenders. I think in the current context, private lenders such as ICICI Bank, HDFC Bank, it's available at reasonable valuation, and also Axis, there is some transformation that is happening. All those things can be looked at.
Right. Dhananjay, thanks so very much for joining us. We'll leave it at that. Appreciate you taking out the time. Dhananjay Sinha there with his market opinion. Well, for the Nifty as well as the Sensex, we're above 10,800, but just marginal gains coming in there. Bank Nifty still doing slightly more better, closer to 0.5% gains. We're going to take a short break. On the other side of this break, we will discuss the GST rate cut for under construction properties with Pankaj Kapoor as well as Sangeeta Prasad of Mahindra Lifespace Developers. And also we speak to Umesh Revankar about Shriram Transport Finance's fundraising activities and business outlook. Lots more on the other side. Stay tuned.
Fulfill your dreams of buying a new house, new car, or achieving academic success. Attractive interest rates and easy processing. The trust, commitment, and excellence since 1937. Indian Overseas Bank, good people to grow with.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back with Indian Open right here on Bloomberg Quint. The Nifty cooled off completely, but one index which is doing well is the Nifty Realty Index. Now, owning an apartment is an aspiration shared by many, a thought that's perhaps prompted the GST Council to lower tax rates on affordable and under construction buildings. Builders will now be hoping that this move prompts buyers to come back into the market looking for houses. $1 million question is whether or not it's going to be enough to make a dent on the massive stockpile that builders are sitting on right now. Joining us right now to talk about this in greater detail is Sangeeta Prasad, the MD and CEO of one of the largest developers in the affordable housing space, Mahindra Lifespace. And here in our studios, Pankaj Kapoor, the Managing Director of research firm Liases, Foras. Both of you, thank you so much for joining in. Sangeeta, let's start off with you. One can't say that this was unexpected. Yes, there was a delay from Wednesday to a Sunday, but most people anticipated this would happen. My question is, does this change the sentiment in the minds of the buyer enough to get the checkbooks and sign on the dotted line to buy the property?
Of course, it does change the mind of the buyer because it has been in the making for a while, because there's a distinct 7% cut in both segments of the market, and the buyer, it's also a message to the market as well as to the whole community that yes, the intent of the government is to boost buying and selling of homes, which has been muted in the past.
Interesting. Well, yeah, I'm glad you made that point, because the budget too showed some signs of the government taking cognizance of the state that the real estate sector by and large was in. So let's talk about which of the two segments do you reckon benefits more, because I think both affordable and non-affordable have seen these cuts. Typically, the affordable one is where the price sensitivity, to my mind, would be higher. But what are your thoughts?
So first of all, I wouldn't categorize the market as affordable and non-affordable.
Okay.
Anything which is affordable to the right segment is what we should look at. So first of all, the affordable has now just become 1%. So if you can understand, it is merely it is a nominal tax, and that is a great indication to the market that the government wants people at that segment to buy homes, and there is virtually no arbitrage between under construction and fully finished goods, because 1% is indeed a nominal charge. In fact, even in the homes for middle class buyers, it has reduced to 5%. It will reduce to 5%. That means again a 7% cut, which will inspire people who have been waiting to buy homes to buy homes. That's the whole idea and intent, and we'll see how it pans out as we step into the next few days and months.
All right, while obviously this is a big leg up for the consumer, Pankaj, come in on behalf of the developers and what this stands to bring in for them, because you've got the input tax credit now out of the window.
Yeah, if you look at the sales were slow, and because of that their cost was going up because the finance cost was increasing. people were not buying in the under constructions. Most of the demand was shifting to the ready. And making a project ready means you have to employ more capital. So, and for that, like, you know, it creates a vicious circle, like, you know, where cycle kind of a thing, like, you know, today's the price is not interacting, demand is not there. And if you have to make the project ready, that means your woes increases. So by bringing down the GST for in the under construction, government actually has boosted the or created an avenue where the builder can reduce their cost many-fold. If you look at that, as per my data, which is 60 cities data, the affordable segment where the where the GST has been reduced to 1%, constitute 53% of the sales as well as unsold stock, which is very big segment. Yeah. But although in terms of value of the stock sold, if you look at it, contributes only 22% because it's affordable segment. But nevertheless, like, it's a big boost for the affordable housing, and in that particular segment, bringing down 1% GST itself is a very boost for the overall real estate sector. Input credit point of view, I have a point of view is like government should have maintained the input credit for the normal housing, which they say that where the GST is 5%, not for the sense that it would have reduced the cost for the real estate, but the GST was one area which was actually curtailing the employment of black money, because the invoicing trail could have been maintained. By removing the input credit, that means you have left out. The builder don't really have to worry about submitting their input credit with the government, where the trail of the invoices will not be available. That means it has opened up the avenue for employment of black money again into the real estate sector. That's the overall thing which I'm saying, that, and real estate sector employs good amount of black money. So in that segment, I see that it is not. But in the overall sense, it has done very good thing to boost the sales in the under construction. It will help reviving this sector, which is facing the toughest time right now.
Sangeeta, coming on this, I mean, while, earlier on, I think there was an 8% input tax credit that came in, which is no longer present. Will that create a little bit of margin pressure for developers like yourself? And the second part of the question being, can that be completely offset by the pickup in demand and the offtake of the inventory that is there?
So that's a good question, but can be answered as we go along in the next few days and months, as I said earlier. So the input tax credit in the short run, Devina, will create a little bit of imbalance in the market, because, earlier when there was a credit, we were passing off some of the benefits to the customers. And without that, now there will be a pressure not only on margin, but on pricing also, because developers also need to make reasonable amount of money. So that's the pressure, but we will be doing our calculations and seeing whatever best benefit we can give to our customers, because the first intent is to raise demand in the market. And that's what, and on a lighter note, Pankaj, we always deal in white money, so that part will not impact us. But yes, there should be standardization in the system. Transparency is very important. But I also guess in the long run, such kind of initiatives by the government will standardize and stabilize the market, will bring in more transparency than opacity.
Okay, interesting. By the way, keep in mind, some of the players, I think there are a couple of notes which say that companies like DLF, which sell apartments only after completing the construction, would be unimpacted by the GST rate. And Pankaj, there is this whole theory, and I would want Sangeeta's view out there too, that some of the companies in geographies like Bangalore, wherein the incidence of ITC is higher, would tend to get impacted more than companies operating in other geographies like Mumbai. Yeah. Have you done some analysis thereof?
Yeah, I'm saying that, like, wherever the VAT used to be higher, there the benefit from the input credit tax was higher. So if you look at like Maharashtra, Haryana and all those places where the VAT was in 1%, the impact was not really much of the input credit tax, but the Karnataka, it was probably 4% or something. So the developer were really gaining quite a lot in comparison to the other state. That is there. But having said that, like GST is one which is bringing all state together. So someone is slated to win or gain, or someone is slated to lose. That is there. But overall sense is like my own sense is that GST was one area where it was bringing the transparency in this particular system. I would have said that like for the normal housing, they should have allowed it.
Interesting. Sangeeta, one, within your geographies that you would be operating in, would you benefit in some projects versus others depending on which geography the project is in? And part two of my question, how much of under construction property currently which benefits as a result of the move that has happened yesterday?
So both the questions, we are doing the analysis of how it is impacting each of our projects, and we will be coming out with our strategy thereof. As far as under construction projects go, I think the customers, we will see some in this financial year, some imbalance, but I think as we go along, the velocity will surely improve. And in the affordable, under construction is as good as finished products because with a 1% GST margin.
How material in terms of demand pickup are you envisaging? Obviously, there's a transition period now. While the announcements have just been made, you have to make sure that the transition of this happens in a rightful manner and in a timely manner. So 1st of April is what they're talking about. But how big an uptick in demand are you anticipating at Mahindra Lifespace because of this?
I wouldn't like to comment on the big or small. I'm sure the overall market will see an uptake, and it will also, it will pan out by the number of questions and engagement our customers have. Already people have started asking us questions on what will be the impact and things like that. That means there is an engagement, and the whole intent, I think the message is very strong. The customers are believing that yes, there is an intent for them to be facilitated for buying, and that's what we are hoping and looking forward to.
Currently, Pankaj, what is the quantum of under construction homes as per your analysis?
Yeah, close to 12,50,000 units in 60 cities in India, and 53% falls in the affordable segment as per the definition given by the GST Council.
This is the additional?
No.
After the definition change?
After the definition has changed, which is 45 lakhs and 60 and 90 square meter.
So which had earlier on gone into the premium segment, that now the additional one has come back in.
Absolutely.
And that accounts to 60%.
53% of the overall unsold inventory as well as the sales also.
Okay.
But in terms of value of stock sold, it contributes only 22% because the costly flats contribute more into the value of the stock sold.
What's your sense? The last time that you were here, you were saying that the inventory buildup is so stark that it requires some mammoth efforts for it to be cleared. Do you sense that this plus what's happened in the budget could lead to that?
Yeah, I'm seeing it's a good time for the end users coming because the government's reduced the tax, but builders willing to sell, they are laden with the debts. We did assessments. The builders need to increase the sales by 2.5 times to stay afloat. Because the debt itself is too high. So in a sense, like the decision taken is in the right directions to boost the sales. Apart from that, it's going to really solve the cost crisis quite a lot. In making the project ready, that means the customer advances reduces. For a project's prudent economic viability, you have 60 to 65% of the money to be taken care by the customer advances. Right now, it has reduced below 30%. And that's a basic reason the builder have to go and borrow the money and to make the projects ready. That means it increases their finance burden. By reducing this, by boosting the sales, it is going to really bring back the economic order in which the real estate can start really behaving and performing well. So in the overall sense, it is very, very good. Otherwise, builders may be saying that I'll make the project ready and sell. At that point in time, I avoid RERA. I also have exemptions for the GST, but it is not economically prudent practice. You employ more capital to produce the same amount of square feet. Because your peak negative increases, it doesn't really give, for a country like us where we are facing problem of housing shortage. If I employ more capital, produce less, that means not economically prudent practice.
Sangeeta, I just want to come to you. I mean, while the government has taken, the steps on GST right now, which obviously is a leg up for the industry and for consumers as a whole, is there anything else that the industry, the real estate industry, which has been really under pressure for the last number of years, in addition to the GST kicker that they have got, would have anticipated?
So coming out of the tax framework, that's the discussion we were having just now. Devina, what stifles the industry particularly is the time taken for approvals and the uncertainty of policies. If you look at Mumbai, we have had a long time for the DP34. So such like things which take a long time to formulate or promulgate, and you have raw material investment done in land, that's where if we can bring the efficiency in the approval system and in the policy making and getting it into single window format. I'm looking forward to the day when everything is in single window format and the framework is very, very tight so that we can save on the approval time and the uncertainty risk and give customers things and products at a better price. Because as I step back and I think we are in the noble business of delivering homes to people, which is the fundamental right of human beings. So these kind of changes will really bring in stability and price parity in the market for customers to buy their products at the right price and at the right time.
Okay. Well, maybe a better sense of how this and some of the other moves have impacted the sector would be known at the end of the June quarter once the new rates are applicable as well. Sangeeta, it's been a pleasure talking to you. Thank you so much for joining me today and giving us your thoughts. Pankaj, thanks for being a part of this discussion as well. Really appreciate your time.
Thank you.
Well, let's wait and watch what benefits come in for the real estate sector. The people associated are reasonably bullish. The next conversation on Indian Open today, it's on a commercial vehicle financier. Now, there's been a slowdown in the heavy and the medium commercial vehicle sales. Shriram Transport Finance is banking on demand from rural India for its growth. The non-banking finance company is also confident of achieving a 20% AUM growth in FY20. To discuss the company's strong outlook, we are joined by Umesh Revankar. He's the Managing Director and CEO at Shriram Transport Finance, joins us right now on the show. Mr. Revankar, good having you. Thanks so much for joining in. I'm guessing now people can't ask you about how difficult it is to raise funds because there are alternate modes that have opened up.
Yeah, the alternative modes have been there for last 2 years. It is not just new one because the Masala bond was available. And the ECB simplification of the rule is another advantage now. So we could launch our bond issue. So I think even the public issue is still open for everyone. In retail public issue also is open to everyone. So there are multi options to raise resources. Only thing is the cost of funds when that's one thing which we need to balance between all different sources to be price it properly.
Now so this amount of money that you raised, I think about nearly $400 million, if I'm not wrong, via that dollar bond sale, does it is that a window that you think companies like yours could tap more often? And does this put you in good stead for the kind of liquidity you needed for the business for the next few months?
Definitely, yes. See, there is a window of automatic route up to $750 million in a year, financial year, which we can raise. We can even request, we can go for approval for in case we want to raise more than $750 million in a year. And as you become well known and as your company story is well known across the other countries, then you can go for lower price over the period. So because you need to create a good secondary market. Once the secondary market is good, then automatically the application will be much stronger in the coming year. So I feel that by going offshore, we have created a market, and it will help us over the period to bring down overall cost.
Right. So what has been the cost of raising this money? If you could highlight that for us. And how has it changed if you were to raise a similar amount maybe last August before the crisis?
See, I can only give you a comparison. We have done ECB loan in August for $350 million. And this is a bond. This is for 3 years, and that's for 5 years. So the difference is one is a bond and another one is a loan, and 3 and 5, there's the basic difference. I think the cost has gone up by around 60-70 basis points between two. So that is the difference. But however, the cost is not most important here. What is important is opening a new avenue and diversification of your source. That is important. So you have to go explore and build market. Then over the period, you can bring down the cost. So for us, since we have a pricing power, we are able to pass it on to our customer. We don't really, a 20-30 basis point cost difference will not make a big difference for us.
Okay, that's probably was what most of the financiers have been saying, is even though the cost of finance has gone up, they're in a decent position to pass that on to consumers. Let's focus on the business side of things now that you've already spoken to us about the funds that you've raised. What is the AUM growth target now that we're going to be seeing? Approximately 14% is what you've done so far this year. Are you going to up that, maybe take it northwards of 18, 19 odd percent? Because your disbursements so far have come off a bit. So do you see that picking up meaningfully?
No, this year, yes, we may be in the range of around 14, 15. And yes, the demand is slowly picking up. February has been much better. But November, December, January has been a little lower than the expectation. Mainly because of real estate market being slow. The bulk movement like cement, steel, etc. has slowed down. And now in February, what we see is infrastructure activities are going up. That government spend is going up. So that is really boosting the demand. So I think March should be good. So we should end up this year at around 14, 15. But going forward next year, we are quite bullish because of a change in technology from Bharat Stage 4 to Bharat Stage 6.
Interesting. Actually, just one question, one related question and final question from mine, Mr. Revankar. Most of the street believes that this transition to BS6 will see significant amount of pre-buying from July till December. Is it as simple and as black and white, or do you think it's unpredictable?
Yeah, it's predictable because the cost, the general expectation is that cost is likely to go up by 10 to 15%, and some even say 20%. If that is the kind of cost increase, many of the buyers, they would try to buy the vehicle at least a few months before the March 31st. So I think there will be strong demand from October to March for buying new vehicle. And it depends upon the economic condition also at that time. If economic condition is good, especially if the new government is coming, a lot of activities, and people see a long-term good benefit, people would take a bet and they will try to prepone their buying. So I feel there will be very strong demand in the second half of the next financial year.
All right, Mr. Revankar, thanks very much for joining us. Really appreciate you taking out the time and good luck with the future. That's the management at Shriram Transport Finance and the money that they've just recently raised of about $400 million. It's a new avenue for them to raise more funds and all looking good, and expect to see disbursements pick up as well. But the markets for themselves right now, just about 0.1% higher on the index, but the Bank Nifty still holds on to its gains of about 0.5%.
Wrap it up on this leg of Indian Open from Devi and me and the team that put this show together. Thanks so much for watching. Stay tuned. The FNO show comes up next.
Fulfill your dreams of buying a new